So the title of this video might not make all that much sense, but please bear with me for just 1 minute. This is going to be a really valuable video, and it's really going to help you with how you're placing your orders, whether or not you're going to use a market entry on the bounce when it comes back to the zone that you're looking for, or if you're just going to place a blind limit order and wait for it to come in. Alright guys, what's up? My name is Hunter. This is Hunter FX, and if you haven't seen the channel before, I am a Forex channel, quite clearly, and I teach you the absolute best stuff for free, and I do live streaming every Monday to Friday, so you can jump in on that. You can see exactly the trades I'm taking, all that kind of stuff. So this video, please, it is going to be very valuable. The title doesn't really make all that much sense, but just bear with me here for a second. Basically, have you ever wondered, would it make more sense for you to wait to see if there's confirmation off of a level and then enter on a smaller time frame reversal? So zooming into the smaller time frame, waiting for the reversal there and then entering? Or do you just place a limit order and wait until it touches exactly the point? And I'm going to tell you that exactly right now, whether or not you should. So I'll just quickly tell you exactly, this is what I'm going to tell you should do, and then I'll show you the charts so that you can actually see it in action. So first of all, you should place a limit order when there's a breakout, let's say to the upside, and then it's an SR flip, and it's the first retest. So not the second, not the third, the first time it comes back down and touches it. Now, the reason why I say the first time is because if it's the second time, well, there's one thing that could happen is, first of all, the level's actually weaker. So you're probably less likely to actually be profitable in that trade, but that's irrelevant. The important thing here is that we've now created a low, and it's going to be very easy for the market maker to stop hunt you. So if you do try to put that that limit entry and then you put your stop, it's going to be very obvious where the stops are, so they can stop punch you. Where you do not want to place a limit order is when it's going to be a support touch. So instead of a support resistance flip, you're just retesting the support as a support again, or resistance as resistance again. So this is range based, and that is very similar for the same reason. It's going to be very obvious where the stops are, so it's going to be very easy to stop you out. And like I said before, you don't want to do this when it's not the first test. So let's jump into some examples so I can just show you quickly what I mean. So we're looking at UJ here on the 15-minute time frame, and let me just show you exactly what I mean here. So we have this consolidation area here, and this is obviously the level that we need to break out from, right? So the first retest, that's right here. That's what I'm telling you. You can place a limit order after it breaks out on the support resistance flip with your stop wherever, down here, maybe down here, doesn't really matter wherever your stop is. You can have a rather tight stop because this is going to be the first retest, and it's going to be a very strong level. Now, what I was saying, the second time it comes down, you now have created this low. Let me just have better coordination. There we go. You've now created this low, and it's very easy to stop you out. So a lot of these people, they're going to have their stops here now, and it's going to be very easy to stop them out. So this level is also going to be weaker. So on the second retest here, we're not going to want to place a limit order. Instead, what we're going to want to do is wait for it to enter the zone, zoom into the smaller time frame, or even the 15-minute here, wait for this trend reversal, and then enter long here with a stop below there. Very similar. You get in a little bit later, about the same distance on your stops. Still going to be able to get a good trade, and you don't have to feel like you're left behind. Now, the thing I was saying about not wanting to place a limit order blindly on a retest of a resistance as resistance or support as support is simply as this. You can see right here, even very clearly, let's say that this is the resistance level. You're not going to want to place a short here acting as resistance, because first of all, you're not going to know where to put your stop. It's going to be a wide stop, and it's very easy. It's the exact same idea to stop you out here. So instead, what we do is we wait for price to react to this level. We see it close within. You can zoom into a smaller time frame, wait for that trend reversal on a smaller time frame, and then enter short with your stop above there. Exact same idea. We can see this is a resistance point. It breaks up a little bit, then dives back down. Obviously, it just keeps continuing back up. You can see this pattern absolutely everywhere. On the support side of things, this is a low. It's a slight sweep there. I mean, I could literally choose anywhere on this chart. That's a low, sweep, break up. I can literally choose anywhere on the chart, and you can see how it is just stupid to buy random range highs and lows. Now you might be saying, okay, maybe I'll wait for a deeper retracement. So this isn't a very deep retracement before retesting lows. You might wait for something that looks like this, right? And you see that this is the high. There's a deep retracement, and then retest of there. You would want to place a blind limit order there. No, exactly same idea. Same thing happens, slight sweep. Look at this, it's happening again. Slight sweep, and then it's gonna come back down, probably. So I've jumped somewhere else here, and I just wanted to make another point clear on those support retests versus the support resistance. This is kind of another example where I can show you we would want to take the retest of the SR flip, right? So right here, for example, this is the SR flip, but you don't want to take the support side of it here, right? Because this would be support, and as you can see, very easy will stop you out. You can see the slight wick below. Let me just show you the one here even below. I literally didn't even look for this. I just remembered that I had to add this into the video. I looked at my chart and I saw this immediately. Look at that. Another one there. These are literally everywhere you look. I might be able to find another one here. Look at this. Boom. I can just drag this anywhere. This is a resistance side of things. You don't want to place on the resistance side. You'll get swept out every single time. It's absolutely unbelievable. So only on the SRs, not on the SS or the RRs. Back again, talking about breakouts, just so you guys can see kind of the flip side on a short here. You can see the price completely breaks down here. This does not count as a retest because it did not touch it. But here, you could have placed a blind short right there. And it would have been very profitable generally, because you know that this first retest on an SR flip is going to be very profitable for most of the time, and then we can continue down. But if we look, you can see the second time it breaks up, continues up higher, and then eventually it would stop you out because it's much weaker, and we do know where these stops are now, so it's very easy to stop hunt just slightly higher. Let me draw a better line here. See, there's a slight stop hunt there because it's very obvious where the stops are going to be before we continue back down. Anyways, guys, that's all I have for you today. I think that's actually, it's very simple, but I think it's actually very valuable. And I don't think many people are going to follow across this video just because the title's not going to make any sense in terms of what I'm talking about. I can't really get the gist of this along in just a couple words. So if you guys do think that this is important, please make sure you hit that like button and share it with whoever, because I would like to get that information along to people, and I don't think this is the video, the title that people are gonna think, okay, that title sounds interesting and I'm actually gonna click it. But I think it's actually gonna be valuable for a lot of people. That being said, if you guys do like this content, make sure you subscribe. make sure you join the Discord so you can talk and listen to those live streams when they go live every Monday to Friday. And one more quick bonus tip for anyone who actually did watch to the end. What I like to do is, if I do have a limit order placed following one of these rules, and it doesn't get filled and it passes the next level, so it goes on and now it's past some sort of support or resistance, I will close the limit order, because now I assume that the level's not quite as strong, or it's been front runned or something like this, and there's going to be fewer buyers ready to enter at that time. And it's all about whether or not there's going to be a lot of other buyers that contribute to whether or not I'm going to place a limit order or not. And then at this point, I'm just going to wait to see how the market reacts when it retests that level, and then we might be able to get in. It would just be a slightly worse entry, but we could still get a good trade.
Listen.